Welcome to Multiple Offers, a real estate show with competing perspectives. Today we are talking about tax assessments with Patrick Johnstone.
Put that coffee down.
If you're good at something, never do it for free.
How'd you get the gig? Oh, you know, they were hiring. It was only a 2-week course.
I will sell this house today.
What are you, some kind of real estate agent?
Oh, he's a realtor. There is a difference somehow.
This is Multiple Offers, a real estate show.
All right, guys, it is episode 38.
Lucky 38.
Lucky 38. Today we have a special guest on the show, Patrick Johnstone. We're going to be talking about tax assessments, which if you are a homeowner, you probably got yours quite recently. Patrick...
Are we addressing him as Patrick? Councilor Johnstone?
Oh, wait, do we want... I thought you were going to go less formal. Like you were like...
PJ? Oh. Only my mom calls me Councilor Johnstone.
Okay, Jeremy totally threw me off.
Sorry,
I had a flow going on, Jer. So we've got Patrick Johnstone on the show. He is a two-time city councilor in New West. He was originally elected in 2014, and he was just reelected in this past election. Congratulations, Patrick.
Thank you.
By day, he is a environmental scientist. He's a blogger and a community volunteer, which is how he ended up getting into politics to begin with. And back in 2013, Patrick, you were Citizen of the Year.
Yeah, that was a bit of a weird thing to happen.
Did you save a baby or what?
Just general rabble-rousing. And it was a little unusual at the time, but it started a trend of a lot younger, more active Citizens of the Year, which is kind of an interesting trend that's continuing today in New West.
Oh, but before that, was it often given to someone more senior in the community?
I think there was a trend earlier where it was people, more senior people who were sort of had a long history of community service as opposed to people who are currently getting involved.
Oh,
but
cool.
I mean, Jen Arbo, Stephen O'Shea. There's young people now who are getting it, who are really in the middle of their volunteer service.
And they all seem to get involved on council now.
No. I think Nadine Nakagawa was the only other one who got elected. I don't think anybody else has been elected. So,
yeah, awesome. Well, what's going on? We didn't tell you about the location change. You showed up to our old studio space.
Oh no, you told me.
Okay.
I'm just a little discombobulated. So it's all very nearby, so it's no problems.
That works out.
We've really started out with a nice welcome for Patrick. Showed up to the wrong location, had to bike here. I spilled water all over him right before we started the recording.
You kind of christened the new recording space, though.
Yeah,
that's great. Yeah, I'm
and
feeling
guest
very moist here.
So, what's being a newly reelected city councilor like these days, or what's going on?
Well, it's crazy. I'll tell you, I just got back from a month-long vacation because after the year of election and there's a lot of work going on at the city sort of leading up to the election because there's a lot of things we have to get done before we leave office. And then you have to get busy doing the election thing. And then, you come down off of that sort of very busy high and you've got a couple of sort of procedural things you have to do at council around getting the budget organized and such. And then I needed a vacation. So I went to Asia for 3.5 weeks. And now we're back and we're getting back into strategic planning and council is getting up and running for another 4-year term.
Nice.
So you had a council meeting just this week.
Yeah.
Was
Monday.
Is that the first in a while?
Well, no, it's the first. Yeah, it's the first since I think December 5th was the last one. So we took almost a month off over Christmas time.
Okay.
Matt, what's going on with you?
Well, if we're just talking about like... Oh, Jeremy.
The listeners can't see that Jer's making I thought it was my turn face.
I'm going last.
Just kind of what we're feeling right now. One thing I've noticed and some language we're using around the office, a lot of people are talking about getting really low offers, Pat, because I'm sure you've heard in the media about how there's real fear that the market's going down.
Yeah, I hear
so a lot of offers are getting written, which is a good sign. A lot of people talking about low offers, and then the debate we're having is it a low offer or is it a low ball offer?
Interesting nuance.
Yeah, I feel like a low offer, well, if that's commensurate with market value, that's okay. A low ball offer is
I think of a low ball offer as unfair.
Right.
But if market value is lower than your price, then it's probably not a lowball offer.
Yeah. So that's what I'm noticing a lot of is maybe figuring out what's a low offer versus a lowball offer. But the good news is there's a lot of offers out there.
Yeah, no kidding. We just did, the three of us just did I did my first deal with the New West guys.
Yeah, the partnership works well. I was heavily involved with that transaction.
Yeah, I didn't see Matt during the whole thing.
But Matt's other half did a great job, right, Jeff?
He was fantastic.
Yeah, it seemed like he was doing a great job.
Yeah.
Crushing it, as Jeff might say.
Hashtag. Jer, what's going on with you?
I was just going to ask you what's going on with you. But I can go. I'm excited that Pat's here, returning guest, friend of the show, here to talk about the city's recycling program and parking and bike lanes. So that'll be good.
Can we talk about sewers too, please?
I
want to talk about sewers.
We can get that in there. Okay. No, but taxes, I know we joke about it's not exciting, but it's right now it's like all the rage. We're talking about, and we're dealing with sellers and buyers alike who are like, what's the tax assessment? And they want to know this information, right?
Yeah, rage is a common reaction.
Oh,
it depends on what side you're on, though, I guess.
I feel like we need to make a new rule that Jer's not allowed to mention anymore that our topics aren't exciting. I feel like it's every single episode. Jer's like, I know this one sounds really boring.
We need like a swear jar for that one.
Yeah, totally. You owe us $5 every time.
You don't want me to do like some of the advertising for the show?
Definitely, yeah.
Episode 38. It's What's new with you, Jeff?
Well, I'm really excited that we're recording in our new space for the first time. We set up a little studio right here at Remax Advantage. Matt, I think, is very excited that we're out of his house.
You should see how messy my dining room is right now.
Yeah.
It's great. Didn't have to clean up for you guys this week.
Nice. Who's more excited, you or the rest of the family?
Well, the rest of the family isn't really impacted because I do all the work.
Because it's just work you have to do.
Yeah. And they probably are going to miss it because they would come home and everything was all put together and nice by the time I'm all wrapped up.
And this is going to be like, you need a new reason to clean.
I get a feeling there's a second side to this story. I'd like to hear a second opinion on your diligent cleaning techniques.
Fair enough.
So that's really what's going on. So we're not doing news today?
No, we're bumping the news. We're just going to get into the meat of taxes.
Let's do it.
Now you want to get nuts? Come on, let's get nuts.
You decide your own level of involvement.
Well, I guess this is a case where we'll have to agree to disagree.
I don't agree to that.
Neither do I.
Wrong.
National debt.
Wrong.
You're not advocating.
Wrong with that money. Lost.
Very nice words, but happens to be wrong.
You're listening to Multiple Offers, a real estate show.
Now, there's a lot to get into with tax assessments and what we can and can't talk about. I think the first thing that's going on is I think a lot of people, when they got their tax assessments, there was a fair bit of sticker shock there. Because there's kind of two separate things going on. We're seeing all this media, like Matt talked about earlier, about how the market is in decline. And your assessments on average was it about 9% on average that most places went up?
Yeah, citywide in New Westminster, all residential properties was just a titch over 9%, 9.03, I think.
Yeah, so I think what's important for people to understand about that right off the bat?
Well, everybody just wants to know about their situation.
Yeah.
I mean, you guys all said that. I brought my assessment with me to the show, and I just want to open it right now and check where was I based on the average. So that's all I'm doing. Keep talking.
Okay. Well, from this, Matt is actually opening his assessment up.
Well, from the city point of view, 9% is a little higher than most of the region. Actually, we're one of the higher. So New Westminster is seeing a bigger increase than almost all the rest of the region.
Blame the realtors.
Yeah, I think only Langley and Maple Ridge are higher than us, and those are notably two sort of lower cost jurisdictions compared to New West. So.
I wonder if that also plays into the fact that, like, we've talked about how we're a little isolated in New West. Sometimes we've got market conditions, things happening in other areas, but you know what was happening in July, around July, when these things were sort of being analyzed, that maybe things were a little bit better at that time here.
Yeah, that's an important point for sure, is that the taxes were done in July. And if you want to know more about how the year went last year, go back and listen to our last episode where we kind of went through the whole rundown, episode 37. What did we call it?
Stats Odyssey.
A Stats Odyssey.
And it's important because we do.
Why does Jer think our topics are boring?
I come up with the titles that make them more interesting.
Oh,
but
okay.
understanding the flow of 2018 is really important because values on July 1st are nothing like what they were by the end of 2018 and what all the media has been talking about since September.
Yes, very true.
So important, and so if we're talking about the like first tackling assessments themselves, not necessarily what your property taxes are. So it's done around July when it's actually made. There are humans involved, but it's also
not monkeys.
It is set on July 1st. It's set at the end of Q2. And actually, if you go to the BC Assessment site for sort of regional trends, it'll actually show that they do quarterly assessments, but the actual number they use is the July 1st one. So and it actually shows on their website that there is a bit of a trend downwards after a bit of a peak when these assessments were calculated, at least for New Westminster.
Yeah, which makes it really confusing because historically, usually we've gone up since July. You watch a usual statistic graph of real estate values, price or values will go up between July and December. So since we've taken about a 10% hit, it starts to be a lot harder for people to digest when they see those assessments. Or what we're getting a lot right now is people inviting us in, thinking of selling their home based on what they've received in the mail as their assessed value.
And they're already 6 months behind.
Yeah, we have to break the news.
Well, and that leads into something that I think is really important before we get into the meat of this topic, is that your assessed value and your market value are two totally separate things.
If for no other reason than they're 6 months detached often. But
yeah,
sometimes they can be close.
Yeah.
Sometimes they can be north of that, south of that.
It's something to consider when you're figuring out the price of your home, for sure. But you get a lot of people who are like, oh, well, my home is assessed $5,000 over this last sale, so I should get $5,000 more. And it's just not that simple. The person who assesses your home doesn't really know the condition of your home. They've never walked through it. And like Patrick just said, they're also behind. It's not what's going on currently today.
Yeah. So I'll take 1 minute just to help the listeners understand sort of the process of where assessment comes from. And we've got a lot of meat to talk about once we know what we're assessed at. But what you're saying, Jeff, right, is they don't know the condition of your home.
Yes.
But they do try to understand the condition of the homes they're using as the baseline. So they create a baseline, the real humans that Jeremy is talking about, and then they try to stretch that out and apply it to every home in the province.
Right.
So it's essentially an algorithm, and they just say, okay, well, your home was built in 1972, and other homes on your block were built in 1972 or between 71 and 76. So you're going to be similar, and your lot sizes are pretty similar, so you all kind of fit that way. But then, how does the assessment authority know if you've updated your kitchen and you've updated your drain tile and you've done some massive improvements to your house, which makes it actually valued very different than the 1973 house 2 doors down? And the only way they know is through public record, which are city permits. That's the only way the assessment authority has any way of knowing that if your home hasn't been on the market and advertised all of these characteristics. If you've been in your home for 15 years, the city doesn't know unless you're pulling permits and putting that stuff on record.
And you do get just weird little things where you'll have like 2 units in a building that are 1 floor apart that just happen to have a difference in their assessment by a huge amount. And maybe Patrick has some insight or maybe not, but sometimes I don't know if it was just a different person who did the assessment on it, or sometimes you just get weird things in the assessments.
It has to come from documented record.
Yeah.
So it's usually from something, either permits that have been pulled, because some condo owners do actually pull permits when they renovate their kitchen and do that stuff. Most don't.
Yeah.
But some do, and that will increase your tax assessed value because you've now documented increased value in your home. Or the assessment people who are there, they do look at real estate listings when it sells. They go and they look.
Yeah.
And they take that and they say, well, I can see that your condo unit, it looks pretty nice.
Yeah.
We're going to have to, bring your value up. And then I don't know where they draw the line where they say, okay, your 2-bedroom condo, I can see you've done an amazing renovation. It was built in 1988 and you've renovated it from top to bottom, and it is now an amazing condo. The one below you, it hasn't been on the market in 15 years. I know nothing about it. It maybe has had some renovations. Maybe it hasn't. I just don't know. And I don't know if they give it like a baseline, like land value, and they give it no credit whatsoever, or if they say like, well, statistically, you've probably done something.
I don't know the deep woods about how this actually functions at the BC Assessment Office level, but I have a hard time imagining they are annually or even quarterly reviewing 3.5 million properties to decide who did what kind of revenue and whose real estate listing looks good or not. I imagine it's much more of a bit of a big data exercise they do. They may download permits from cities just from open data, download that permit and say, well, there was $20,000 worth of work done to this city and add it to their data set.
They do.
Yeah, I think it's a matter of it, but I don't think it's a personal activity thing.
Well,
I think this is a big data thing.
It's certainly not one-to-one. Yeah, no, they just take that spreadsheet and just say, okay, well, you've got $20,000 of value on a permit, so we're adding that value to the improvements of your lot. But assessment representatives have called me over the years.
Yeah.
And they ask me about properties.
Oh, really?
Yeah, they try to really understand the ones that they're zeroing in on to become their baseline that the algorithm then stretches out and applies to 1,000 units surrounding it.
Or someone's maybe appealing it and they need some insight.
Well, I've had calls for both. I've had calls to help with appeals, and I've had calls where they're just saying, hey, I'm just trying to understand this sale. Like, Matt, you represented this sale, and it looks out of line with the market.
Right.
And I have to put it into the data set like you're talking about, Pat. So how do I properly maybe adjust it into the algorithm so things don't end up out of whack? So they're kind of handpicking little ones to try to get their math formula correct.
So I think that's enough preamble. Let's move into some stuff that our guest is
the expert,
well equipped to talk about. And I thought it would be appropriate to start with talking about the relationship between assessments and what you actually pay in taxes, because I think there's a lot of misconceptions here.
Yeah. Your assessment going up 10% doesn't mean that your taxes are going up 10%.
What?
Based on, even though your taxes are based on your assessment. And that's that's something for people have to sort of get their minds around. So what the city does every year is the city basically says we need a certain amount of money to operate the city. So if last year it cost us $100 million to run the city, next year it's going to cost us $103 million, then we have to put taxes up 3%.
Okay.
That when we say taxes are going up 3%, we mean that we're going to collect 3% more money
based
from
on
taxes.
the budget.
Yeah, we're going to collect 3% more money this year than we did last year from taxes. So obviously, if everybody's assessment goes up 10%, we can't raise everybody's taxes by 10%, or we'll get more than that 3%.
Or they won't elect you ever again.
Yeah, well, that's another. Let's get by the electability issues of it all, because ultimately that's a big difference in taxes than the other fees we collect. Is that we are free to raise taxes as much as we want
really? Interesting.
Until the electorate tells us to go away.
Right.
So how your assessment is impacted by the tax increases, or impacts how much you feel of tax increases, is all related to how much your assessment increase relates to the citywide assessment increase. So the city went up around 9%, right? The assessments went up 9% across the city. If your personal assessment went up 9%, then you're going to have then your taxes are going to increase at exactly the average rate of everybody else's taxes.
So is it fair to say the money New West needs to run is the entire pie, and everybody went up 9%? If I stayed in line with that 9%, I'm basically still just responsible for my portion of that pie. That I like, it's the same.
Your piece of the pie is
my
the
piece
same.
of the pie is the same.
It hasn't
it's
changed.
Not, which I think is the big misconception a lot of people have.
Exactly.
Yeah.
So my example, I'll use myself as an example. I own a small house over here, a little 1940 house in the brow of the hill. And my assessment actually went down by about 1% this year. So because the city's average assessment went up 9%, I'm very likely to have a reduction in my taxes this year.
Okay. If the budget's the same.
If the budget were to stay exactly the same, I would see an 8% decrease in my taxes. The city over the last few years has had increases somewhere around 3%. That's kind of been the average tax increase. So if we're going to use examples, let's use that 3% as an example. The city has not set its tax rate for 2019. Let's be clear on that.
Okay. So we're not officially 3%.
We're not 3% at 24. No, we have not set the tax rate yet. We're doing a bunch of the budget work right now. What the city has to do is we have to send our 5-year financial plan to the province that includes our tax increase by May. Anyway. Let's assume it's 3%, just because that's what's been kind of around average the last few years. If you have your typical house that went up 9%, and the city decides to increase its taxes at 3%, that means that the amount of money that you pay in taxes next year will go up 3% over the previous year.
So really, I care about my relationship to that 9% if I'm trying to figure out.
Exactly.
Yeah.
So the average single-family detached house in New Westminster went up about 6%. Okay. So if you are own that typical $1 million single-family house in New West, and your house went up 6% in value, that means that your house went up 3% less than 9% than the average, right? So the 3% tax increase the city has and the difference between you and the average balances out evenly, and you'll pay exactly the same amount of taxes as you did last year.
Ah, you picked some convenient numbers for your example.
I didn't make up those numbers.
No, I just mean it was nice how the math worked.
Yeah, so the counter to that, of course, is if you're a typical condo owner, condos went up around 14% in New West.
So your taxes are probably going up a little more.
Yeah.
It's going to go up 8%.
Yeah, so if you're 14%, the difference between that and the average of 9 is
5.
Thank you, Matt. That's why you're the realtor.
We call him Fact Matt.
That's why you're the realtor and I'm the city talkie guy. 5%, and so if the city's taxes go up 3%, add that to 5, then the amount you pay is going to go up about 8%.
So my townhouse only went up 2%. So I'm probably in good shape.
Assuming the city's taxes go up 3%.
Yeah.
Then 2 plus 3 is 5.
Yay!
City's average is 9. You'll probably save a little money on taxes.
Ash. I just called Matt my son's name. Matt did.
He was very boyish.
Did you check the yours? I saw you looking at yours.
Yeah, mine went up 7%.
Ooh,
so slightly below average.
So I'll pay a little more in taxes. A little more.
Nice.
1%.
Assuming it's 3%.
Assuming it's 3%.
That's always an assumption.
But yeah, I'm below average, which is sort of nice there. It seems the higher valued properties went up less than the condos, right?
Yeah,
which
is what the market did.
That is exactly what the market did, but it definitely goes contrary to history, where typically the detached side was going up more, and the detached owners have been paying really a large chunk of the property taxes.
And I'm up 11%. And we talked about algorithms and people and the whole tax authority assessment agency, and it's funny because sometimes you'll see a sale in a building. I'm in a townhouse complex, very small townhouse complex, and then all of a sudden your actual value will just match what a sale was, and it just seems like it's consistently you kind of see that when there's a sale, like almost like they just see it and then like, okay, that's market value, and it was right around that time or whatnot. So
that's what the algorithm's meant to do, right? Yep. I think they do have the interest upon destruction from a strata plan. They use that as part of the math formula.
That's a lot. That's a lot there.
I don't know I know what all those words individually mean.
So interest upon destruction
sounds like a band name.
I didn't ask for a definition.
I think it's worth for the listener who's like, what did Matt just say?
You poked the bear.
Elaborate just a little bit.
Well,
on that.
and it's something actually that's helpful for someone like Patrick to understand is that condo owners at the baseline of their strata says if you're on the 15th floor and then your neighbor is on the 5th floor and you have an identical floor plan and otherwise identical units, like let's say a brand new building. In the event that the building goes down, they realize and they have to rebuild it and how much each person gets paid out upon destruction. The person on the 15th floor has a higher valued unit, got a better view. So it's just formulated that way to say if you've got an obviously better setup, even though your square footage, your footprint is the same, you are worth more. Right? Or if you're the one who has a massive terrace or balcony or something to that effect, that is being taken into account and it adds to your value, not just that you're the same 2-bedroom condo as all your other neighbors in the building.
So it's assessed differently than your strata fees, which are usually just square feet.
Strata fees is unit entitlement. Right. Yeah, which is essentially what percentage of the building you own.
Yeah, exactly. So that's where that's probably part of the formula too, and how they kind of run that through. But anyway, that's a good example and definitely sort of helping put that myth to rest that if my taxes go up 30%, my assessment goes up 30%, then my taxes I pay will go up 30%. Not true.
Could you imagine how hard it would be to run a city if that was the truth? Because we would never know what our budget was until the assessment came in.
Right.
It would be this random bolus of money would come in, and remember, cities are not allowed to run deficits and we're not allowed to run profits. We have to, within a 5-year plan, we always have to zero out our money.
Out. So it's amazing, Pat, because you have to have this conversation every single year, and as do we.
Yeah, that's fine.
To remind people that, don't get too worried about your assessment. You first need to see how you fit relative to your neighbors. But the next part is, once that's dialed in and we know it's going up 3% or whatever it is there's the whole formula, the math around this, the mill rate that gets discussed, and there's a lot of that other stuff, right?
What's a mill rate?
Mill rate is how we calculate how much taxes you pay, and a mill rate is a per mill, just like percent, but per mill, so per thousand.
Per million.
No, per mill. Mill means thousand, like a millimeter. So it's the amount you pay per thousand.
I'm gaslighting Patrick.
I can't believe this guy's a realtor. He knows nothing about Latin.
No, Jeff.
So it's the amount you pay per $1,000 in property value. So it creates a bunch of weird misunderstandings about how property taxes work. But the favorite to me is that the city charges you per mill, but obviously different cities have different land values. And so the mill rate, if you look at West Vancouver is always the best example in Lower Mainland because property values are crazy in West Vancouver. And West Vancouver has both the lowest taxes in the Lower Mainland and the highest.
Say what?
Well, people will often compare cities in the Lower Mainland and say, look, New Westminster's got high taxes, West Vancouver's got the lowest taxes because their mill rate is very low.
Okay.
I wanted to ask you, and this is kind of on the same sort of thread, but you came up, I actually read one of your articles, blog posts, 2014.
Poor you. You and my mom.
Long time ago.
You read it originally.
Originally, yeah. I've lots of time on my hands. That was before children or
long time.
Or
child. Big fan over here. He's going to want you to autograph this chart.
So
later.
no, these are, and again, not good to have pictures and
I love
pieces
the
of
visual
paper
diagram
on radio.
Jeremy just passed Patrick a bunch of graphs.
Bar charts.
Does that stuff? The question: does that stuff change? Is that still kind of applicable, or did the mill rates change?
So for the listeners, what Jeremy passed was now I can't really see it very well, but is that how all the different cities compare to each other
in 2014?
Yeah, that was I did. So I have a blog. I have a blog that I talk about sort of the city a lot in the blog, and over the years I've been asked a lot of questions about taxes, and I started doing this actually before I got elected. I started writing these pieces about how answering these questions. How does your mill rate relate to taxes? How does New Westminster compare to other cities? And again, New Westminster has relatively high mill rate, but relatively low taxes.
I just want to stop you for 1 second. You put this out before you were a city councilor?
Oh, I was blogging this stuff before I got elected.
Citizen of the Year.
Okay, now I understand.
And that's purely just from passion for New West and
it was
and numbers.
Yeah, I was just always kind of talking about this stuff. I don't know. I'm not saying it's healthy. I'm not going to defend it.
But it's also come from people saying that our taxes are so much higher than everyone else's.
Every city in the Lower Mainland has one thing in common: is that the people who live there think it's the highest tax city in the Lower Mainland. So the point is, again, let me finish the West Van thing.
Yeah,
West Van has very low mill rates. If you compare all of the cities in the Lower Mainland, West Van clearly has the lowest mill rate, so the lowest taxes, except that the average property value in West Vancouver is 5 times the average property value in New West. So the actual money they collect in taxes per household or per capita is much higher than any other city in the Lower Mainland. That's why I kind of joke they have the lowest and highest taxes. So this speaks to the problem of comparing taxes between communities. We can't compare mill rates. It's not fair because it doesn't relate to how much money the city actually takes in to operate every year. We can compare it by average household, how much money we collect from the average household or the average house value. But again, that's problematic because a city like New Westminster is 40%, 43% rental households. A city like New Westminster has mostly multifamily, more multifamily than it does single family. So those end up becoming variables that make the comparison difficult.
Yeah, that can skew the numbers a lot.
Yeah, I mean, you guys know what's the average home price in New Westminster, and how does that relate to the?
Well, we never speak to it on an average. We can't.
You can't
exactly,
because you have to either talk about condos, townhomes, or
right.
houses because the numbers has no value.
Exactly.
Yeah.
So you can compare. I try to compare mostly by per household. So if you just take and the provincial government has stats that you can collect from the provincial website, has stats every year they collect of all the city's finances. And they put it all together in a single spreadsheet so you can compare cities and just say, look, this is the amount of money we collect in taxes, which, New West, it's something around $70 million. And then you just divide that by the number of households you get. That's one way to compare how much tax we get per household. You could also do it per capita, right? There's a couple of different ways you can compare it. And I'm not sure which is fairer. Like it really depends on what you're trying to compare. So, but by most analysis that I've done, New Westminster is pretty sticky in the middle as far as residential taxes. We're a little higher than average on business taxes, but we're property taxes on businesses. I don't mean to say business taxes.
I see.
Yeah, commercial rate.
Yeah,
commercial and industrial property taxes. We're a little higher than average. Residential, we're a little below average.
How do we compare to our neighbors like Burnaby and Coquitlam?
Basically, as a general trend, again, generalizations here.
Yeah.
Everybody north and west of us is higher, and everyone east and south of us is lower.
Okay.
That's a good generalization. There are some anomalies. Anomalies based on the size of the city. The anomalies based on things like Delta. Delta's got Annacis Island. Annacis Island is a huge industrial property that they don't have to provide much services to, but they get a ton of tax revenue from, so that allows them to reduce their residential property tax.
Oh, interesting.
Little things like that end up playing into it.
I have some more visual aids.
Okay. And just while you prepare that for a second, I just want to mention to our listeners that you might be hearing Pat say, like, hey, we have like really high property taxes on businesses in New West, and you want us to maybe ask him about that. That is not the purpose of today's show, and I'm not going down that rabbit hole. So we're not here to grill City Councilor on why taxes are a certain rate or anything like that.
It's a trap.
Yeah.
Go to my website and just search that. I'm sure I've got a couple of blog posts on that topic exactly.
Yeah.
Excellent.
But we want to keep it on point just to understand the taxing process for today.
Yeah.
So, I mean, we get... It doesn't seem to happen as much anymore, but I remember it kind of used to happen more often. But you have people saying, like, why are taxes so high in New West? Because they're looking at, like, say, I just printed off 2 properties that are for sale, and I kind of just went on very similar tax assessed value, and this is based on last year, versus how much that assessment, how much they pay in that municipality.
Jared, give us a little insight. So what did you just pass, Patrick?
So we have 2 properties that were for sale, one in Burnaby, one in New Westminster. And I'm not looking at what they're...
these properties are very comparable, in your opinion?
In tax assessment wise, just 2. I just wanted to pull 2 addresses with similar tax assessments, and I use the MLS because that's what I had in front of me, and it allows me to look them up. So, I mean, we've got 2 properties here, and now that I don't have them in front of me, I can't see them, but 2 assessed values of...
682 and 683,000.
So pretty close. And then what's kind of the rough difference between their yearly property taxes?
Yeah, about $160. So about 5% difference between the 2.
And is the New West one paying the higher of the 2?
Yeah.
Is that okay?
So to me, and these are, you're looking at like market value of around 700, 750.
Exactly.
So kind of an average condo, maybe a little bit higher, more average in Burnaby. To me, that doesn't seem like that big of a difference. $100.
Is that's for the whole year?
Yeah, $100, $150 a year. I don't see that as too much. But the second part of the question, and I printed a couple illustrations, but they're pretty much the same idea there. How does it play in? We have our own police force, utility company, which is, I guess, another monthly bill.
Are you asking where the money goes?
I'm just wondering if that's part of that. Is that it's because of our budget?
Oh, I want to finish this thought a little bit.
Okay, let's...
I don't think Burnaby and New West are the best comparators because they're too close together.
Okay.
A better comparison is actually Vancouver and New West.
I'm so confused.
No, $1 million property in Vancouver will pay a much lower property taxes than $1 million property in New Westminster.
Because they're a much smaller piece of the Vancouver pie.
Because they're a much smaller piece of a bigger pie, and because they are relative to the average value of a property in that city much smaller. And also, let's think, $1 million property in Vancouver is what?
I have a 2-bedroom condo downtown coming up next week for $950
In Vancouver.
and it's 800 square feet.
Yeah. So what's $1 million property in New Westminster?
A really, really nice townhouse or a house that needs a lot of work.
Well, my house doesn't need that much work. My 1940, my 1940 house in
Maybe your assessment's off.
Yeah, maybe. So the point is, I guess, where you fit in that average impacts it. So in this case, the average property in Burnaby, I mean, it costs the same to run a city. Generally, I'm going to get to your second point. That does actually.
I think New West is more because we're old.
It does sometimes cost more to run some cities than others. I agree. But this ends up becoming this weird thing where people compare. And I wrote a blog post about this because a friend of mine was complaining that she was paying more tax on her $700,000 house. This was a few years ago.
Yeah,
a $700,000 house in Glenbrook North than her friend was paying in her $1 million house in East Van. And I'm trying well, your house in Glenbrook North is a lot nicer than that East Van house. And if you bought that house in East Van, you would have paid a whole bunch more money for it. And the difference in your taxes are irrelevant compared to the difference in value.
Yeah, where she fits on the totem pole is much higher.
Where you fit in the totem pole of property values really impacts how much property tax you pay. So that is, again, a very difficult thing to compare between cities. Otherwise we'd all be living in Langley City, where taxes are probably the lowest mill rates, or the highest the lowest overall value,
right?
Lowest overall cost in the region. So how does the amount of money? So that's why I like to do the comparison around per household or per capita, because I think that's what really impacts our lives, right? How much am I actually paying in taxes to the city for my day-to-day life? Because houses don't pay taxes; the people who live in them do. So in that case, we tend to be slightly below average in the region. Slightly below average in the region. So what are the other factors that affect how much money the city needs to run? I think that's the question you're really getting at.
The other part, yeah.
New Westminster has a couple of challenges that make property tax higher. Residential property tax higher. One is that we don't have a lot of industrial property base. So I gave the example of Delta. Annacis Island is a great cash cow. And sometime back in the 50s, no one wanted Annacis Island. Right. Delta took it, made it into industrial wasteland, provide relatively inexpensive services to it, and make a ton of money on industrial taxes. That was a great idea for Delta at the time. Too bad New West didn't take it on. Vancouver's got the downtown. The commercial properties in downtown are worth so much money, and commercial and industrial taxpayers pay much higher tax rates than residents do.
So they shift some of that off of the residential.
And so
owners.
that ends up becoming, it costs you $100 million to run your city. If the business and commercial are paying $20 million of that helps the homeowners. So cities have to constantly balance that between how much we charge businesses and how much we charge homeowners. Every city in the Lower Mainland, every city subsidizes home owners with commercial and industrial taxes. Okay. We all charge way more to industrial and commercial than they collect in services and subsidize homeowners. So that's one factor: how much commercial and industrial property and what's the value of it. That impacts residential taxes. There's a bunch of weird things that impact it. Utilities don't. Gas or sewer, water, garbage, those don't impact it because those have to, by law, be run separately than taxes.
Oh, so interesting. I didn't know that.
Your sewer, water, and garbage bills, we can only collect money from you to pay for that utility. We have to. We can't make a profit on that, and we can't subsidize that operation by law. That is something that is run separately from city taxes.
So there is no profit when I pay my $5 extra for my bag of garbage or whatever that sticker costs me.
All of that money goes back into the garbage utility, and all that money either goes into capital in the garbage utility, and we adjust rates every year based on what we need to maintain that utility.
If you need to upgrade one of the mechanical parts of that system, is that coming from?
No, that's budget. So we have reserves in those utilities. Those utilities are run separately. So it gets a little bit complicated because municipal finance is complicated. Part of the problem, of course, is city employees do a bunch of that work. So our utility actually charges our city. Our garbage utility charges the city for taking its garbage away. And the city charges the utility for using our employees to do their service. There actually has to be a separation of that finance.
Accounting, right? Yeah.
Because the utility has to be run as a utility, self-supporting, nonprofit utility. So utility fees are different than taxes. The difference in New Westminster, one difference we have, of course, is electrical utility.
Right.
New Westminster is one of the few cities with an electrical utility. Nelson has one. I think Penticton does. There's only a couple in cities in BC that still have one. And that's a long legacy of New Westminster having electric utility from the 1800s. The way that operates in New Westminster is the city buys electricity from BC Hydro at wholesale rates. It sells the electricity to residents at rates that are basically the same as what BC Hydro charges all their regular retail customers. The difference between those two is some number of millions of dollars, somewhere around ballpark numbers here, people. Don't hold me to these. The number's around $8 million difference. We make profit on our electric utility every year. About 3 of that goes back into operating utility and creating a capital legacy so that we can actually build new substations and stuff like that. The rest of it goes right to the city, and the city, we can spend that however we want. And what
three mil?
About we take in about $5 million a year from the utility.
So that's $3,000.
Oh my God. See what you did.
We take about $5 million in. So that's profit. We are allowed to run the electrical utility as a for-profit enterprise under the city, and that $5 million offsets your property taxes. It makes your property taxes lower because that's money we can spend in the city to provide services and not have to charge you taxes.
Okay.
There's a few other little factors like that really impact how a local government's tax our infrastructure costs. New Westminster, a couple of weird statistics, has the highest proportion of its land dedicated to roads of any city in British Columbia.
We got a lot of roads.
Roads don't pay taxes. Roads cost money to maintain.
Yeah.
So weird things like that impact our taxes. And then there's the fact that you've got a bunch of, pretty progressive political people who want to do things like support affordable housing, support childcare. Support,
right.
We make choices every year about programs that we want to support. And that has an impact on taxes, and we're aware of that.
The private police force is the same sort of idea.
Municipal police does cost a little more than RCMP. It does cost us. I can't give you an exact number of that premium. It's something like 10% more.
Yeah, just trying to get a picture.
It does cost a little more than RCMP. I don't think we're really going to give that up. I think we see a real value in the community, and if you look at the impact that our police force has had on New Westminster in the last 10 years and their ability to compassionately deal with a lot of social issues we have in New Westminster and actually make this a better city.
Gives you more control on the needs that your city has.
Police force is so good for the community.
I think that we've had great leadership in the police force and a really great... I will say...
It's working.
We can have another entire podcast about how great our police force is.
Yeah.
Now, you prepared lots for this episode, which we are very appreciative to have you on here and sharing all this information. We are going to just kind of give you a chance to make sure we cover some of those core items. One being one that I wanted to have you have a moment to speak to, because it does relate to everything we just talked about, police, school, all the rest of it, is that a large portion of the property taxes that we pay in the year doesn't go to the city. We keep talking about how the city taxes us and all the rest of it, but it only makes up for a portion of the total that we as property owners actually pay out of our pockets.
Yeah. So last year, the mill rate was somewhere around 4%. That means that for a person with $1 million house, you paid about $4,000 on your tax bill. But of that $4,000, about $2,500 of it goes to the city. That's your city taxes. So we only get about 60% of your tax bill. About 30% of it, $1,200, goes to the school tax.
Okay, and that is not determined by
so
our local school district.
Is separate from the city.
Oh, let's talk about school tax. School tax is...
I feel like I threw him a softball there. His eyes
you did. So school tax is actually money that goes to the provincial government and goes into provincial coffers. That's where it goes. Ostensibly, it is a tax that is used to pay for your local school system. It's not controlled by your local school board. It just goes to the provincial government. And then the provincial government funds the school system however they feel like funding it. There is one city, one city in British Columbia that pays in school taxes as much as it costs to run their school system, and that's the city of Vancouver. Every other city, their school taxes are different than they pay
like
less. They pay less in school taxes than it costs to run their school system.
Oh, okay.
So school taxes are disconnected from, but it does. It's the only way the provincial government has their only real power to take money out of the property tax system. That's really their only direct way to do that, and so they do it. And so that's why this additional tax they put on expensive houses was called a school tax, because that was the only legislative ability they had to do it.
Because otherwise they don't have any right.
Otherwise, they would have had to rechange the entire tax regime. They would have had to create a new tax. Instead, they just attached it to the school tax.
That's interesting.
It's a little bit lazy, but people were arguing, well, this isn't actually a school tax. It's like, sorry, buddy, it's never been a school tax.
School tax is never actually just a school tax.
And school tax is adjusted just region by region. So the mill rate for school taxes is adjusted by the province. We have no say in it, and it's adjusted region by region to sort of make it kind of fair.
And then we got Translink or transit tax and other things that kind of dip in there.
So Translink, $200 of your $4,000 tax bill went to Translink to
Is
run.
it still called Translink?
Oh well, yeah, it's still called Translink.
It changed too.
It's not BC Transit.
Yeah.
Yeah, Translink is different than
That's
BC
what
Transit.
I'm thinking of. I'm thinking BC Transit.
So
totally.
this is there's a big thing because Translink,
We're older than you think.
Only Translink does that.
Yeah.
In the other parts of the province, when Translink was formed, they don't pay a tax to BC Transit. All of their transit is paid for by the province.
Yeah.
No one pays a property tax to BC Transit in Victoria or in the interior. But they do pay a hospital tax. They pay an extra line in their property taxes, which goes to pay for hospitals, which we don't pay in the Lower Mainland. That was a deal that was made between the province and the Lower Mainland when Translink was invented.
That was to compensate for the...
Exactly.
Taxes are weird.
Taxes are weird. And then there's a little bit of money, about $100 out of your property taxes goes to other things. That includes Metro Vancouver to run the Metro Vancouver administration. The BC Assessment Authority has to get paid for the work they do.
Yeah.
So
computers do a lot of work.
that comes out of that. Municipal Finance Authority gets a little bit of money out of that. They get a couple of pennies out of your property taxes just to operate what they do. So the big point to me is you get that $4,000 tax bill. Remember, $2,500 of that is coming to the city.
And then you can go argue with somebody else about the rest. If you're an angry resident, go take your argument to. You got 40% of that bill to go argue with somebody else about them, Patrick.
Yeah, I'll take 60% of your argument.
Cool. Anything else in this very much appreciated stack of papers that you wanted to make sure our audience is hearing from?
No, it's up to you guys. What do you guys think your audience wants to hear?
Well, I think we've covered a lot. There's a ton to digest there. And before we do our little outro, we'll give people some resources that they can find. And I'm sure Matt's going to put lots of these things in the show notes.
Do we have a time for another JR question? It's a quick one.
Maybe the one topic to talk about, though, before is appeal. You guys haven't mentioned the fact that what the appeal process is and how that works.
Well, you're stealing my thunder here.
Oh man!
We've got a question of the week that relates to that, so we'll get into that in just a second. But I think Jer has one more thing he wants to.
There was property taxes, and there's talk of because we need a new pool, some new rec facilities, things like that. This is kind of a New West specific thing, and I probably could have done my homework and looked that up. But maybe people are listening that live in New West. Let's just kind of give them the goods. Is there any update on that? Is it something that's going to be added? Is there in addition to property taxes? I thought there was something.
There was a Canada Games pool tax
something
that was being talked about.
CGP,
correct?
right? Yeah.
Yeah. So a lot of cities do this. This is something that. Your base mill rate is the base mill rate we collect because we need to collect X amount of money to run the city. So, but we also attached a separate line item. We took a piece of your mill rate and separated it out and called that a I can't remember what we called it. Canada Games Pool or Facilities Amenity Fund or something. Okay. So what we basically did is last year our taxes went up a little bit. Part of the increase in our taxes last year and part of our increase. This year, I anticipate, even though we haven't decided yet, and part of your taxes next year, probably, even though we haven't decided yet, will be We'll have to go to the capital fund to pay for the Canada Games pool replacement, which is the biggest capital project the city's ever done.
Right.
It's going to be a $100 million pool. It's a big expense for a city of 70,000 people. So
that's over an entire year's budget going to one facility.
Absolutely. Yeah.
Essentially. If you think of it that way, that's massive.
Yeah. It's going to cost us a lot of money. And we need it. We need it when we. I'm not that worried about the public acceptance of needing the facility.
I want a new pool.
Yeah, I think
classic Hayek.
Yeah,
I think it's telling that when we announced that we wanted to build this pool and what it was actually going to cost, we had a protest at City Hall of people coming and telling us that they'd wanted something bigger. That's a very unique New Westminster situation to have us. Socialist councillors trying to say, I don't think we can afford it, guys. But anyway, that's New West. New West does everything different. So what we decided, and this is totally a political decision, we decided that, look, our taxes are going up every year and people are going to notice this. I want to have a line item to show people, look, this piece of your taxes is actually going right to that fund.
This is for transparency.
This is just a transparency thing. And it's to tell people, look, to remind them on their tax bill, this piece right here, this is going to pay for that pool you guys
just
want.
Isolating it so they have that visual to see.
Yeah, and it's probably protecting us a little bit, right?
Yeah.
It allows us politically to sort of say, yeah, I know your taxes are going up more than we
right,
wanted to.
Because of the balance and everything.
But we have to pay for this darn pool. So
I like to know what I'm paying for. I have a recreation property, and I get line items on there that say I have a community line item.
Yeah.
So it just goes to some of the folks who do sort of our local community stuff, and then recreation. And I see firsthand exactly where the recreation facilities are added in the tiny little community where it is.
This is sometimes a problem in some communities because often there's a long list of these items and they don't necessarily get advertised when the city compares taxes between cities. We have the lowest taxes in the Lower Mainland, except that you guys have an extra levy for this, an extra levy for this that are part of your taxes. And some do actual property levies, which are not based on mill rate, but it's just like a flat $100 per property. And that's we don't do that in New West, but some cities do that, which again complicates the comparing tax values between communities.
Cool. I have one last question, very last one. Is the mayor insulted that we invited you and not him?
The mayor is a little busy right now. I don't know if you see, he's been involved in the mayor's council. He's the chair of the mayor's council for Translink right now. They've got a lot of work to do right now with some of their capital plans. He's busy working on strategic planning for the city right now. He's got to sort of put together the process through which council is going to get together and discuss our big strategic vision for the next 4 years. The mayor's very busy. I don't think he minds at all.
Cool. We have designs, and maybe you want to plant the seed to get him on the show one day this year and talk about a lot of what the city is doing around housing, because you've introduced a lot of new measures, and we're going to let some of those percolate a little bit, and maybe he'll come on and tell us more.
Yeah, there was some exciting stuff at last count. If you weren't paying attention to council on Monday.
I'm in the know.
Oh, you're in the know.
Yeah, but we'll save that for another show.
Well, and maybe just a little plug for you. Patrick, you publish a lot of stuff about the council meetings. That's part of your blogging.
I have been blogging at the city around the city since 10 years now. But when I got elected to council, I decided to start writing about the council meetings. And after every council meeting, I write a report on my blog that says, "Look, here's the 15 decisions we made," and I try to write a short, one paragraph thing that just says, look, this is what we decided, just so that people understand. There's so much procedural stuff at council. There's so much that you go to a council meeting, it's really hard for someone who isn't paying attention to understand what decisions are being made and how they're making decisions, just because it's so procedural and it's a 4-hour meeting full of procedural stuff that isn't clear to people who aren't in the know. So I try to make a short, unlike this sentence, I try to make a short summary of the decision we make, just so that people can try to understand a little bit more about what we're doing at council. And I also ask people to send me questions so that I can answer them on the blog and sort of help people understand the city a little better.
Best segue ever.
Yes. On that note, we're going to move into question of the week.
Check out the big brain on Brad.
How's that working out for you? What? Being clever?
Who knows where thoughts come from? They just appear.
You're listening to Multiple Offers, a real estate show.
All right, so this question comes from Christy. Christy's tax assessments went up 80%.
Yikes!
So,
Ay caramba.
yeah, so she saw that we were having you on, and she sent in a message just saying that her taxes went up 80%. She was shocked.
Her assessment went up 80%.
Yes, her assessment went up 80%. Thank you for the clarification, Matt. She called to ask the city about why this happened, and she was told that she just needs to go through the appeal process. So her question is, what steps should she take to prepare for the appeal, which I think speaks to a little bit of what Patrick was going to get into. And then we also do have her address, her building, rather, which is 715 Royal, which I think Matt and Jer, maybe we can get into a little bit about, because there's some specific stuff that's happened in that building.
I used to live in that building. The first apartment I ever rented in New Westminster, my brother and I lived in that building back in 1988.
That's amazing.
Good times, man.
The values went up after Patrick and his brother left.
Well, that's why it went up 80%.
All right, next question.
They're like, former citizen of the year lived here? We're way off.
So that was 30 years ago.
So,
oh, my God.
So let's start with the actual appeal. So how do we appeal?
Well, there's a few things that go into it. The first most important thing people don't need to know when this is publishing is listen to it right now, because your deadline to file your appeal is January 31st.
Very important.
Okay, so that's the first part. You got to do some homework before you decide to do it and understand if it's really worth doing, right? But this is an example where it probably is. The first thing to understand is average.
Yeah.
Patrick has said on the show repeatedly today, 9% is the average increase in New West. So really, if you're higher than 20, you're definitely
so at 80.
outside.
What you're paying is going to go up significantly.
Yeah. The cost to you is going to go up. So then you need to really do some more digging to find out, will I be successful in my appeal? What can I do? Because that 80% to her probably applies to most or all of her neighbors in the building.
In theory, it should be. We haven't gone through and checked, but yes.
I think Jeremy did. Jeremy pulled some numbers, and all of them do have gone up considerably. So yeah, he was looking at quite a few properties, and it seems pretty consistent that they went up.
Okay.
So the appeal process, I don't really want to get into all of the how-tos, because
let's start with where do they go?
Right. Go to the BC Assessment website. So bcassessment.ca. And
It's on your assessment here you brought in.
It is on your assessment. We'll put a link in the show notes. That's where you go. There are resources there to help you along to do this. The important thing to know is don't invest yourself in doing it unless you have some sort of sense that you will be successful.
Okay.
Yeah, I think you can call. I mean, it's kind of a two-step process. I know you can call their 1-800 number or whatever it is, and have that conversation as an initial thing, and sort of talk. You actually can talk to an appraiser before you actually go through the formal application for an appeal, and get some advice on how to move forward. I do know that part. But the point is, yeah, time is clicking, because you have until January 31st, and if you don't get it in by then, you're not going to be heard.
So if somebody in Christie's position, I think that's important, because from the tone of the email I got, I didn't get the sense that she felt like she could talk to somebody. So she can talk to somebody first, is what you're saying.
Yeah, my understanding, I mean, there is a 1-800 number. You can phone them, and you can have a discussion with an appraiser beforehand, and they will probably give you some advice about whether, how to move forward on it.
Okay.
Because there's a couple things, right? It could be, we were just looking at it, and it seems like it's on track that it was behind, that building was behind for a bit. But if someone's appealing, they might have an instance where their house, the condition of it is actually deteriorating, and it's kind of just land value. And so, but the main appeal thing you would think is going to be, is the condition different of my property than what maybe they think?
So if I'm somebody appealing my home, and I'm looking, because the assessments were done in July, and I'm like, oh, the sales of my home, the last few sales in December were way lower. What do I do? Because obviously it needs to be compared to everybody else in July, correct?
Yeah, that's the starting point.
So I need to get some ammo if I'm going to actually do it.
Yeah, I mean, what Patrick's saying, though, is they can just call in and get a good start there. But
Step one, talk to somebody.
But if you still think that you need to proceed, you need details. You need numbers. Yeah. And that has to fall around that July 1st range. But like Patrick's saying, you have to dig around and get it, but the quarterly reports are out there that'll tell you roughly what values were around that time, right?
Yeah.
this likely applies to Christie and could apply to other people who are wondering why their assessment went up disproportionately more than others. And that will be because the assessment authority has identified a significant amount of improvement to the property. Because land values all go up roughly the same rate.
Yeah.
So where the discrepancies will be is on the improvements on the piece of property. And what they're saying about that building, it applies to everyone in the building, is the building has invested a lot of money in it recently.
Now, you're talking about improvements to the actual, like, the structure.
The overall structure of the building, because that those condos in there were devalued for a number of years. As agents, sometimes we'll say, ooh, that's an old building that's been a bit neglected. And I'm not speaking to 17 Royal, but we might say that to clients, like they're going to need to do plumbing and they need to do elevators and they haven't done their roof and they've got some siding concerns, and people pay a lot less money to buy into there because they feel that they need to save up a lot of money to pay for all those improvements down the road. And 715 Royal has invested a lot.
They have done a ton of work in the past few years.
In the past few years, they have replaced and modernized their elevator. They've replaced all of their plumbing. Their roof is reasonably young, and they did all of their common areas
some of the
as well.
balconies.
Yeah, all of the balconies actually were done, along with all the sliding doors to the balconies. And that was the big one last year, is all of the balconies, a bit of an exterior refresh, and sliding doors was on the books last year.
Right. So that could factor. Jer, you kind of looked at their assessments year by year, right? Did you have anything to add as far as...
I mean, there was, if you go back to, so the most recent one, it seems that, because you also kind of identify, was it just this one unit? Did they get, did they have improvements here, or
is this the whole
just taking kind of a random sampling? It does seem that they were, if you go a couple of years back worth of assessments, they were on the lower side because there was some items that needed to be repaired there. But a lot of that's been addressed now, and they seem consistently all up around the same amount. And if you look at a sale that happened in May at $365,000, it sold this past May, just before the assessments. And it's assessed now at $323, so it actually sold a bit over what it's assessed at now. But no, they're fairly consistent. So they were playing catch up is kind of what.
Yeah, and I have a thought on that too. I want to jump in, and sorry, Christy, to keep sort of justifying why it went up so much, because I hate to say that.
Yeah, totally.
But the low end of the market had the biggest boom in 2018.
That is very true.
Right, the entry level buyers were still buying and buying aggressively because they had to start somewhere.
Mm-hmm. Yeah.
So it became a baseline where anything in New West cost $300,000. And 2 years ago, you could pick up a 715 Royal for $110.
Do you think the recent boost in rental rates has also impacted that? People are buying those lower cost ones because the rental rates are all of a sudden 30% higher than they were last year, and there's more chance.
Well, you can't rent at 715 Royal, though.
Yeah. But as an alternative to renting.
It would definitely, for young people as an alternative, they're saying rents are so cost prohibitive, I may as well buy something because it's the same cost as renting and it gets me in the market.
Yeah, but the boom sort of trickled down, right? All the way from $1 million houses.
After you left, they stopped allowing rentals. For whatever that's worth.
Sometime in that 30 years?
Yeah.
So I apologize, Christy, for being the bearer of bad news, but the market was on your side, a sense that your property is worth a whole lot more than it was 2 years ago.
I mean, the good news is her building caught up. They were selling way lower than other homes that were similar in size and condition, but they did a ton of work and they improved their value, but unfortunately...
And they're probably paying way, way below average tax rate for probably a long time.
Yes. Okay, well, I think that's going to do it for today. Patrick, thank you very much for coming on the show.
Thanks.
It was great to have you.
Thank you very much.
If you guys are enjoying this show, please think about leaving us a 5-star review on iTunes. That really helps us find more listeners. And if you want to find out more about the blog Patrick was talking about, or any of those
links to BC
Assessment, all that stuff, you can check the show notes. You can find Patrick at patrickjohnstone.ca, and we'll put his email address in the show as well. If you want to get in touch with Matt or Jer, they are at thenewwestguys.com. And if you want to get a hold of me, I'm at realestatennewwest.com. Thank you very much.
Have you guys ever noticed when you come back from a long vacation, maybe Pat, you're just away for a while, you go to get in your car and nothing about driving it is intuitive?
What?
Does this happen to you?
Where are you going with this?
Do you notice that, though?
I came back from a month-long vacation where I had not driven in a car. And my windows were all closed, and it was a little moist when I was gone. So I have currently spent several $100s on detailing, trying to get the mold out of
no.
And I'm currently running a dehumidifier inside my car 6 hours a day, trying to get it to dry out in there because it just is moist.
Cars, they don't like
guys
sitting.
Plan this? Was this a setup?
No, not at all.
No.
Whoa.
No.
Oh,
that's too bad. No, I'm thinking like when I get back from vacation, I haven't driven in a long time. I get in and I'm like, which side is the wiper control on? Was it on the left or the right? And I'm like, and nothing. Like when I'm driving down the street, all of a sudden, like not everything's quite as automatic. All my maneuvers.
This is coming back from Tulameen?
Anytime. Like if I'm on a long vacation, I haven't driven. You get in the car and it's just sort of not as. I can almost drive with my eyes closed because I drive every single day.
You better not.
Anyway, frequency for me tends to have better performance. What I'm starting to notice.
That's what she said.
Oh! Good thing this is after the credits and no one's listening. I'm going to keep carrying on. What I'm getting at is I've noticed that people who use a car share service often don't drive as often. And I have way too many close calls with Evos than any other car on the road. And they are high on like my spidey sense now.
So you just want to hate on car sharers?
I understand many people using car share service are regular drivers, and they're like a 2-person household with one car, and they probably do it more often.
Or you're an Evo person with several vehicles, and you just kind of like driving those little cars around. Yeah. It's kind of fun.
Jeremy is a regular Evo user, but Jeremy is a regular driver. But there are some people who hop in an Evo and don't drive that often.
You know, I am a lifelong cyclist and a pedestrian advocate, and I have an entire hierarchy of driver skill levels measured just by make and model of car. I can tell you exactly how a person is going to act just by the condition. Yeah, what model of Ford they drive. I can tell you what kind of driver.
Okay,
they
so
are.
I drive a Fusion. Where do I rank?
You're fine. You're completely innocuous. No one in a Fusion has ever been evil.
Who is better drivers from a cyclist perspective? Car to go or Evo?
I don't know.
Differentiate between.
I don't notice the difference.
But have you noticed they're worse though?
As a general rule, people who drive car share don't drive as much.
So do you give them a bit more space when you're cycling? You're
I'm probably not that aware of it. The people I give more space to are anyone driving a Mustang. There's something about Mustang drivers that just brings out the aggressive need to own road space around them. They're kind of like cyclists, but in cars. Large trucks just because they can't see you. They can't see out of their trucks. That's
just a physical limitation.
That's a physical limitation.
Yeah.
Oldsmobiles, because people who are driving Oldsmobiles are not aware of their surroundings. Oh my, is this being recorded? Because this is
this is part of the show.
I'm going to have to get some of these people have to vote for me. I love all my drivers equally.
And Patrick lost all the Mustang votes.
Vote Pat Johnstone. Vote Pat.